Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, no, that's not what we want. Come on. Wrong music. Yesterday, I said, well, I think the bet I would make is that CPI will be a little bit light. Well, shouldn't have said that because now everybody knows and the market had a huge run up yesterday. So let's come and look at the charts. I'll show you what we mean. Charts. So here, ZN. Well, ZN is about where it was. We had a good auction yesterday, and that pushed us up. But we're about where we were. But the S&P 500, holy crap, they went. There was also, getting above 56 or 5,600 was also a big deal. But I think that's like the futures are running the index, and it was when the index crossed that they were getting excited. Anyways, big run up, like panic bid. The VIX actually went up from all of the calls that were coming out there. So oil, a little bit of a pullback this morning. Gold and silver, kind of on the up. I think that, if this CPI is light, might be the right place to play this might be gold and silver. We'll see. Kappa looking a little bit weak this morning. And the Japanese yen, well, looking pretty nasty overnight, but they have bounced a little bit. The our synthetic dollar index at 104.51. Bitcoin still trying but unsuccessfully to get over 60K. So the problem that we have trading this CPI is that the market has run up so much that I am really uncertain what the reaction function actually is. So flows, CPI. Does anything else really matter? Question. Okay, but actually, we could see profit taking flows after the CPI. And there is a 30-year bond auction. All right. So that's basically what we're looking at here for today. And for the numbers, they are looking for that CPI month over month, headline CPI month over month to be a spot 1 versus a previous reading of 0. And the core CPI, which is the one that what really matters, they expect to come in at spot 2 versus a previous reading of spot 2. Yes, because the bonds are behaving like rates are going to be cut, we should be well over 120 in ZB, in my opinion. Well, I don't know about that, but like when I look at interest rates, it sure looks to me like a 4% is just around the corner. So, well, I'm a little bit concerned about the reaction function here. I do see a possibility for rates to come down further in, if not today, in the coming weeks. So normally I would take a sim bet on this. I'm not going to do that this time. I will kind of keep the account armed just in case. Okay, so there's a little pop before the news. Somebody trying to ignite something. Okay, there's the news. Wowzer, wowzer, wowzer. They sure jammed right there. Okay. CPI month over month negative spot 1 versus an expected spot 1, and core CPI spot 1 versus a spot 2. So it was what we thought, and man, oh man, did they jump there. Holy crap. Okay, so this is where we get into again, though, is like, what is the reaction function here now? So we did get a less than expected number. Is there going to be a significant amount of retracement? Well, I was not ready there. I should have made sure that my live account was on limit orders, because there was an order that I could have picked off there, perhaps. I don't know if I actually would have gotten filled, but I didn't have it set to limit orders, and I didn't want to click on it. So let's see. I think it was at 4.2 though. Good grief. Man, that really went. Like, what we went from 4.287, let's say 4.29. And now we are at 4.8. 4.18. So that's like 9 basis points just off of the number. That's insane. That's an aggressive move. Okay, well the pullback so far isn't too bad, and a little bit of absorption in the 07 area. The dollar got slammed there. Gold up to 24.02. And the Japanese yen really liking that too, by the way. By the way, I didn't say good morning. Good morning, Octavius, Uzi, Robert, A. Paul, Brad, Namrus. Think we can find something in this mess? Well, I don't know. There's a little bit of a... The S&P 500, man, is not backing off. Look at that. That is wild. Well, let's just watch it. I'm gonna shut up. Let's just watch it for a second. This is crazy. Okay, well, Walter Bloomberg on Twitter is reporting that the rate futures have priced in an 85% chance of a September Fed rate cut after the CPI data up from about a 70% chance before. But what I'm actually interested in is if anybody is making a bet that they're doing July. Because with it being the spot one, that kind of, I think, puts July on the table. Okay, so there's a few bit more pullback in the flows. I am seeing it. Okay, so this is actually, yeah. So here's the pop. You can see a really big change in about 15K, but then ever since then it's been sell. So we are indeed, I believe, seeing the profit taking here. Also, yield curve did steepen quite substantially off of that. So I think that could give us a place. Let's see. Now, okay, so I think there's a couple of things that we got to keep in mind here. Number one is that the market did very much front run this news yesterday. So there is likely to be a lot of profit taking, I think. The other thing that I think we need to keep in mind is that there is more than just the headline number. And there could be some little nuances in the sub numbers as people read through it and determine what's going on that could also influence the market. So, you know, the possibility of substantial pullbacks are very high. That said, the furthest back I see it going right now is maybe 27. We're kind of getting back to this spot. So like one of the things that I'll look at is like, okay, if I was able to have taken a trade in the micro during that mess, what price would I have gotten? And my recollection was that it was sitting there at 4.2 and I didn't have an order ready. So if that's the case, the way that this usually goes is that it would retrace back onto me. So 4.2 might be, you know, might be a spot where it kind of balances out. That's what would always happen to me, is it would get back to my spot and then it would chill there. Okay. Well, I'm seeing further downside. I should note that I'm seeing this profit taking much more in the 10-year than I am the others. The 5-year in particular really jumped on that. And I think that, you know, if we were going to take a trade, given the way that the spread is going, that you're probably better, if you're going long, buying it in 5 and selling it in the 30. I really like, by the way, that short you took there, Octavius. You know, that's a little bit too scary for me in this kind of action. And I'm not taking a sim order because I am kind of thinking about taking a live one. But, well, what just happened there? Because weren't we right there at 4.2 and the micros have dropped a bit? What's with that? Okay, well, I don't see a story about the CPI on Zero Hedge yet, but they do have a premium article up now that says market could be blindsided. Chinese shipping costs raise fear of reacceleration in global inflation. That would suck. That would suck. Okay, let's recenter right there. Because that's where I remember it being. Only took 6. Okay. That was a good trade. Octavius, good job. Good job. By the way, I should note, gold did not really pull back at all. I said, maybe the way to play this, if the number comes in the way that we expected, which it did, that maybe the play is buy gold. Well, I have no clue how far gold could get, but gold and silver looking pretty good. Silver up 2.2%. And the only losers today, commodities, natural gas down 1%. Natural gas is always a big mover, though. That's a really volatile instrument. Copper down 0.39 and oil down 0.05. Oil, by the way, popped on the news. When I'm looking at the charts here, little bit more of a pullback in oil than the other instruments. So that's interesting. Okay, so they are right at that VWAP at 03. Ooh. Not able to get through it. What? Braze hacked the Heritage Foundation, which caused the executive director to reach out, and the chat logs are vile. So vile that I will not read them out, but it is vile, and I'm surprised that in a situation like that, that any person, leader of such an organization would say such things. Must have been really mad. Must have been really mad. Okay. Back up to 06, man. That was a really brief reprieve. But on this move up that we're seeing here, especially like at 06, we are seeing some market orders come into it. And we're seeing some continuation. Like we are new highs in cumulative delta in the 5 years. So that might have been the best we're going to get. Okay, so there was a good wave there. It seems to be subsiding very quickly, though. Well, I've been eyeing a continuation trade through this, but it doesn't really seem to be cooperating to me. Didn't come back quite as far as I wanted. Not that I thought that we were going to get back to the 27. I guess maybe I shouldn't have thought that we were going to get lower than the VWAP, but that's okay. I thought we were going to be above 4.2. Let's say in yields, right? But then, we had a little bit of a pop up and that kind of faded quickly as well. So it looks to me like this, I think that I may be able to take a trade somewhere in here. Like if I was really willing to hang on to it, I might be able to find a spot in here where I could hang on. But I think that it would be a really turbulent ride, and I really don't like that. So it may just not be cooperating enough for me to take a trade given my risk tolerance. But I don't know. Look at that. So now it's come back and forth across this range 3 or 4 times. Very in quick succession. Hey, what's the use for the dollar index? Well, it tells you what is going on in your currency, and that will affect the value of pretty much everything that you trade in dollars. Generally speaking, when the dollar is going lower, it's good for the price of everything else, which, by the way, is what's happening right now. The price of everything else is going up and the value of the dollar is going down. Could it be used as a risk on or off for the market? I think you could, maybe. So I don't think that the dollar going up is a risk off and the dollar going down is a risk on, purely. I think that if you really wanted, like, the dollar is so complicated. That's the thing. You got to be really careful with correlations in the dollar, okay? But if you wanted the oversimplified rule is if the dollar is moving up, sell everything, and if the dollar is going down, buy everything, okay? It's more complicated than that, and it changes based on instrument and the reason that they're moving and things like that, okay? But in this situation, you can see that as the dollar is going down, the value of everything else is going up, right? And as the dollar pulled back here was when, well, I don't know. So with that in mind, what we're seeing in the dollar, do we think that the dollar is going to continue to go even lower, or is that, you know, already gone too far? Kind of looks like maybe it's already gone too far. So I would expect most of these to moderate a bit, right? Like, it's been 20 minutes. We can wait 30 minutes afterwards, see how much things calm down. 30, 40 minutes afterwards, see things calm down. Find the dollar, find a footing, and then other instruments might be able to, sort out where they really want to go. But I don't know, like, where I find the dollar to be really useful, okay? Where I find the dollar actually to be essential is I'm watching the treasuries, and maybe there's some level where I've seen a lot of iceberging. It's just, it can't seem to get through that level. And then next time it comes down to that level, I'm expecting, okay, there's probably still liquidity there. There's probably going to be iceberging. They might not be able to get through it again. And if they do get through it, it's going to take a lot of volume to do it. But then I'm wrong, and it just slips through on hardly any volume. And I'm like, what the heck? Why is it that before they were so stubborn and couldn't get through that level, and now is blowing right through it? And whenever I think that, the first thing I do is I go and I look at the dollar. And if I can see that the dollar is moving at that time, then I realize, oh, okay, it's moving because of a currency correlation. So if it's moving because of a currency correlation, then if I'm going to take a trade in the treasury, it's because I expect that currency correlation to continue to drive things. But in that situation, I know that I can't rely completely on the market orders that I'm seeing in the treasury to predict where things are going to go, because that's not the dominant factor at the time. It is the correlation. In other words, when it is a correlated currency that is moving the treasuries, the order flow is not as predictive, and that is not as good for a read on the order flow for us. You can still get really good trades from those because, if the dollar moves, it can move, right? Okay, with the release, what type of action would be expected for the indexes for RTH? Good question. I'm not really sure. So the issue, again, that I'm having trading this particular news is that I was able to call yesterday. Yesterday I said, I would expect the number to be a little bit lower than consensus, in line or lower than consensus. And apparently I was not the only one, because the S&P 500 just went wild yesterday. That panic bid into the close was insane. So what is the reaction function today now that it's happened, given that so many front-run the news? Well, there was still a really massive reaction on the news release itself. We are getting a pretty significant pullback. So we have to factor that in. And I am seeing some selling flows, or at the very least, kind of like mean reversion sort of behavior in the 10-year treasury. So I don't know if the S&P 500 opens up and they just take profits and it kind of settles here, or if some sort of counter trade comes in, or if they say, oh, this is even more reason to buy in, just continue to drive it. So particularly for the S&P 500, I'm not sure what kind of flows we can expect. Now in the treasury, I would expect there to be some profit taking. Yes. But when I look at the yields, and I think about this, like if the Federal Reserve is going to cut rates in August and all of that, the 4%'s got to be around the corner, right? So actually, let's look at something real quick. We'll pull up a new chart of the 10-year. Days, and add like 2 years worth of data. And I want to know, when was the last time that we were at 4.2? No. I want day. That might take a while. Okay, there we go. So the last time we were at 4% was March. Oh, very interesting. Which was about where we are at in the treasuries, by the way. So DV01 has changed. But yeah, that like pricing wise, granted, this is an incomplete way of analyzing the market, right? Because what moves the market? The orders. And we have to anticipate future orders. But there is a way of looking at the markets, which is like, okay, given the current economic conditions and all of these sorts of things, what should the interest rate be? And I say that it should probably be below 4%. So that's why I think that there is a possibility for some continuation flows once kind of the profit taking and pullback is kind of over. But kind of looks like it's a risky trade either way. So, well, interestingly enough, the market making and everything has kind of pushed this level to be the stop out zone. You can kind of see here on my indicator. I've never seen it like that before, where these two lines are intermingling with each other. And then this one catches up to price. I've never seen that before. If we were to get a real pullback, it would come back to this line. But I don't think that that's going to happen. So we're like, I don't know what kind of price I can get, but this is kind of around this place that I was looking. I want to wait a little bit longer. I want to wait like 30 minutes after it's been 25. So we might give it another 5 minutes, but let's recenter things at least. There was an iceberg there. Well, maybe I gotta do that one. Okay. Interesting. It's funny that as soon as I said, well, I would maybe prefer it to be a little bit later, but I did see a spot to catch the edge, and they filled me. And then it went a little bit lower. So I'm going to let that one. I'm going to feel the market out with that one a little bit. See what happens. Need Twitter. That's what I want. I was looking for. It's like I want to change a tab. Oh, okay. So Nick Timmerell's core CPI on a 3-month annualized basis fell in June to 2.1%, the lowest reading since the pandemic. Meanwhile, the headline CPI declined in June, and inflation over the last 12 months was just below 3%, the same as in June 2023. Well, core at 2.1 means we're where we want to be, right? Time to cut interest rates. Yes, it does mean it's time to cut interest rates. Fernanda, the thoughts on why the downside move? You mean the pullback after the pop on CPI and equities? Well, I think that the market front-run this move so heavily yesterday, you've got to expect pretty heavy profit taking. That doesn't mean that they can't continue higher later. You know, I think this first 30 minutes is kind of going to be mean reversion, figuring things out, and then maybe we'll see if there's another leg or not. But yeah, in equities, I don't know if I'm too concerned about it. Like when you look at the cumulative delta in the futures, in the equity futures here, right? Big pop on the CPI. Yeah, cumulative delta pulled back, but not that much in cumulative delta, even though price it almost completely retraced. So, yeah. Also, when we come back over here, we are seeing the dollar retrace a little bit, and so everything's kind of moving off of that. The AC turning on there. Cool, clean air feels good. Thank you. Yeah, no. Do you think stagflation could occur? Well, I mean, to be honest with you, I kind of feel that stagflation, very, very mild stagflation, but that's what we've been experiencing the past 2 years, right? But we've maybe possibly turned the corner wherein, you know, there's been enough market weakness now that inflation has come back to target, and we can normalize interest rates, and then we can go back to having a really strong economy again, perhaps. There's a lot of risk coming in the second half of the year, though, so I'm not gonna count our chickens before they hatch, right? But I think that question is a little bit too late. The question right now is not could stagflation occur. The question now is, could there be a recession, right? Like, do we overshoot on this disinflation trend and get actual deflation instead of just disinflation? Because there are some banks and economists now starting to forecast a recession. I mean, if we're going to have a recession, interest rates are going to go a heck of a lot lower than 4%. So we'll see. Okay, well, what did we get? 7 ticks favorable so far. But now it is completely retraced and I'm a little bit underwater. So they sure are fighting around this area. We'll see. So far, they haven't been able to really get below 03. So hopefully I don't have to puke this. So yeah. there is a possibility that somebody decides to try and push it over the edge, and you get a little bit of stop run. And take a look at the cumulative delta for the pit session and what, the 10-year? I mean, I don't know if I really see anything that significant. Honestly, the cumulative delta that I see in the overnight action, I don't know if it matters too much or not. But you can see that in the 10-year, at the very least, that yeah, the deltas have been kind of sideways. Interesting when the dollar and the S&P 500 are going the same direction. So, but they're not. Okay, this is a weird thing. When you look at Forex does almost everything as dollar currency. And, that's or actually the opposite, right? Like what you would trade in Forex, if that's going up, that actually means that currency is getting weaker and vice versa. So like right now, the dollar is going down. The dollar is going down and everything else is going up, right? That makes sense. If dollars are worth less, but the value of companies and commodities and everything else has not changed, then that should mean that the value of those things in dollars should go up, right? So when would they go the same way? Man, I mean, it has definitely happened in the last 5 years, but I can't think about when it did. Where dollars went up and the S&P 500 went up. I don't know. The more the inverse correlation is much more common. I tell you that much. I guess where the correlation is really interesting and unique is between the dollar and the treasuries, right? Because interest rates going up is usually good for the dollar, but it shifts around. Like when we started to see inflation, the dollar actually went up, which was kind of weird, right? Kind of weird, but actually apparently not without historical precedent. And George Soros has some thoughts on that, but I don't recall what it was they said. But apparently that was a thing in the 70s and 80s too, where everybody said, oh, the dollar should get weak, and it didn't. And he made money off of it. Okay, well, that last little kind of bounce there was a lot better, and it did finally give me 10 ticks favorable. Yeah, the ES almost made it all the way back to the start of the move. Yeah. Well, they did touch, what, 5680? So, close enough, let's say that they completely retraced it. Yeah. So, I'm noticing that on this move, where the treasuries have moved up a little bit again, that the dollar was falling back down. So, So now the question that I get into is like, okay, for this trade, what's my target? Well, I think that we could see some meta orders coming into the treasuries, buying treasuries, because I think yield's got a ways to go. So number one is that I should be able to hang on to this. Like, we'll get pullbacks and everything, but the chances of it coming back to my break even now are very, very low. And we are starting to see a meta order. Do you see it? Do you see? It's starting to come in. So this is kind of I'm always hesitant to say this one because I don't really have any evidence to back this one up. This is just kind of something that I've noticed. It seems to me that when you have really big news, and that is big news that causes certain funds and so forth to have to make moves, that they still wait until 30 minutes after the news release to do something. That may be because they are just waiting for the volatility to die down, but it may also be that it's just not until the top of the hour that those funds, the equity traders and everything start doing stuff anyways. But it does appear that we are getting a meta order in the market now. So I think we can target, okay, so we're already to the high in the cumulative delta, but I think that we could get 20, 30,000. So I should be able to sit tight here on this. I'm not seeing any kind of like liquidity hole creating activity yet, but that's the next thing that I've kind of got to keep an eye out for. Normally I would also have to keep an eye out for counterflows, but I think in this situation counterflows are unlikely. Maybe brief little holes, but something that would completely be equal and opposite of the current meta order, unlikely. That was like what, 3 ticks back though, so. Okay, let's see here. Eric Wallerstein, we expect breadth to expand with better than expected Q2 earnings in non-tech companies and non-tech margins to explain how AI is helping cut costs and boost productivity. We are raising our year-end S&P 500 target to 5,800 from 5,400. We expect today's CPI report to come in soft, increasing the chances of a September rate cut and several more in the coming year. What are the chances that the ES returns back to the highs for the moment? Well, so that's hyper speculative. I don't have a really good handle on what the flows are in the S&P 500. So I'm going to say pretty good. Pretty good. Like the degenerate gambler in me is like, buy the dip. But I don't really know. Okay. So just don't take a trade because of me, all right? I'm looking here in the treasuries to see them get above 10 there. So far they're kind of seeing a little bit of pushback, I think. Yeah, not financial advice. See, for me to give you financial advice, I would have to know everything about your financial situation and your goals and your future needs and all of these sorts of things to be able to understand what sort of investments and moves would be most appropriate to you. What I can do is I can give general advice to the public that is not specialized towards any one individual, and or just express my opinion and my own trades. And you know, so I can do that. If I think the S&P 500 is going to go up, I can say, well, I think the S&P 500 is going to go up. But I have to give an extra caveat in this one that I'm not necessarily an expert in the S&P 500 and being able to predict future orders in the S&P 500. But I don't see anything that would stop us from getting back up there, man. And, you know, I think that like really, really huge selling flows just seems incredibly unlikely right now. So for a speculative trade, long S&P 500, why not? Why not? Okay, well, where could I maybe be wrong? Okay, one might be there might be more profit taking than we realize, and the profit taking might continue through longer. I'm kind of sitting here thinking that the profit taking is over and that we're going to have continued legs up. Something bad could happen that hurts stocks. That's always a possibility. Another thing might be that I think the chances that the future orders in the S&P 500 are long is really good. But, like, how much heat will you take before that? Right? Like, what's actually a good spot? That one's kind of tough. Like, same here in the treasuries. So I caught a good trade in the treasuries. I caught a good spot. I'm feeling pretty good that I should be able to hold that. It's come back on me like 5 ticks. Okay, but that's really good. You know, now here in the treasuries, like, does it make sense to buy 07.5? I don't know. I don't know about that one. I kind of think that we probably will later breach the highs, but like, how long will that take and how much heat will you take in the meantime? So that's another caveat that you would have to consider specific to you. It's like, what is your risk tolerance? How long am I willing to hold this because extra? Right? What? Front row Tucker Carlson seats are going for $18,000 on StubHub from his upcoming Phoenix show? You've got to be kidding me. People pay $18,000 a seat to see Tucker Carlson? What? That's insane to me. I would never even guess that they would go for that much. Wow. He must be making so much more money than he made when he was on the television. That's insane. Okay, well, it was looking really good there for a second, but they ticked back down at 08. So it kind of looks to me like that for the moment, they still don't quite have enough oomph to breach the highs yet. Put a trailing stop locking in 50%. 50% of, you mean like I should put in a trailing stop at 4.185? I don't know, man. You know, there's these sorts of things that this is one of those things that's always bothered me. I've always been told, and everything that I've seen is like, you know, when you get a winner, like put a stop at break even, or, you know, trail your stop up and that sort of a thing to lock in your profits because you don't want to lose all of your profits on it. But when I do back testing, all of those things reduce your overall profits. So what is actually the right way to do it? I don't know. Now here with my discretionary way of doing things, counter signal, it seems to be the best way to do it. Like seeing something that is a distribution or a reason to go short, and that's when you get out. Is it fair to say that fixed stops are 50-50? Yeah. I totally think so, Ahilo. Like, the market in general is very random. And so anytime that you put in a fixed stop or target, you are essentially making probability the largest factor in your strategy at that point. So I will put in fixed stops and targets if I'm like testing something specific, largely because it's like an easy way to really run a test and see like, is there actually some sort of probability advantage in that setup? But by and large on intraday data, it's just going to make your results random and break even. So yeah, for real strategy, I think that you want something that allows in some situations for you to take a larger stop, and in some situations for you to take a longer target, and vice versa. Yeah, is the 10-year yield the same thing as the treasuries? Yes. So here's the way that the terminology goes is treasuries basically means 5 and 10-year treasuries. When it's a 30-year, they call it a bond. And when it's less than a year, they call them bills. Okay. So each one of those things has a yield on it, which is to say, if you bought it today and you held it to maturity, what would you get per year, right? And yields move opposite of price, essentially. So yes, the treasuries are moving up, yields are moving down. And the way that we measure yields is in basis points. Basis point is basically 0.01. 0.01% is a basis point. So today, we moved from a high. What was the highest lot that we saw? 4.285, let's say. Okay, and now we are at 4175. So that's basically 11 basis points, right? We've moved 11 basis points down. Now, the micro treasury yield futures, these are priced in 1/10 of a basis point. Okay. And then I guess it would also be worth here talking about the markets that we have. So we have the treasury futures. There are actually cash bond markets, the largest being Broker Tech, which is also owned by the CME. We don't get Broker Tech data. I've tried really hard to get it, but I haven't been able to get it without like paying exorbitant prices. So there is a cash bond market. So you can go and, based on the prices that things are being bid and offered in the cash bond market, calculate what the current yield is, right? And the micro treasury yield futures are a cash settled future based on an index that tracks those yields. Okay, this last little pullback has been a little bit excessive. Like I lost 10 ticks there real fast. Like just while I was answering you there, Tony. But I think we'll continue to see this going on. It doesn't look to me like, I think part of this is they just don't have the oomph to make a new high in the 10-year yet. And that, well, let's see here. Did that retrace? Well, yeah, actually, we got to be a little bit cautious about that. So this is, I'm trying to swing this. So, okay, there was a long there, and then we saw cumulative delta come back down. So I could have taken profits on that, but I still expect there to be further flows up. So, I can hold through a pullback like that, and I have the room to do so. But that is concerning to me. That is concerning. That could be something that could get us out. Right? Was a significant drop in cumulative delta and pullback there and everything. Now, the S&P 500, kind of middling a little bit, don't you think? Like, it looks poised to go higher. It looks poised to go higher, but it looks like it's kind of, and then maybe it'll, let's see. We'll see. But cumulative delta in ES hasn't really come. You usually don't see super huge changes in ES outside of the news events until the S&P 500 opens, until the New York Stock Exchange opens. So we still got 10 minutes on that one. I feel a little bit in too good of a mood because this is up almost plus 20. I need to be more cranky. I need to talk about politics or something. Get cranky about it. Joe Biden talking CPI report shows significant progress fighting inflation. Oh, that's right. We get the big boy press conference today. Yeah. So apparently we get the big boy press conference today, and then there's some sort of a NATO meeting or something like that. And then the Democrat Party will decide if they're going to kick Joe Biden. So this is a timeline on that in case you're interested. I'm not sure what time that press conference is, to be honest with you. I'm going to guess that it will be after 11 o'clock Eastern time, but that's usually when they do those sorts of things. Like, I think that at 11 o'clock Eastern time is when Jean-Pierre normally has her press conference, so I would assume it would be then. But I don't really know. During the Trump years, we knew because it was always market moving and televised, and so I watched every single one of them, but not in the Biden years, because the Biden press secretary really doesn't know what's going on and nobody cares what she says. I kind of suspect that she's not really truly the press secretary. Like she has given marching orders on certain narratives and so forth that she's supposed to be pushing, and she's not the one determining strategy or narrative or anything like that. And her only job is to get up in front of the podium and say stuff. And so I think that she's been frustrated because she has given some answers during all of this, like, if there is an emergency in the middle of the night, do you wake Joe Biden up? Well, no, you have other people that handle it first. She's not really being given clear direction on this, and she's kind of frustrated about the whole situation, and that's maybe why you get those answers from her. Okay. Oh my gosh. So we had a little bit of a pullback and it looked good, but it slumped back to 05. So at this moment, I feel a little bit too keyed into every little move. There was just 3 ticks up. Well, this is not outside of kind of my predictions for the flows, that it was like, well, I do expect them to continue buying, but there's probably going to be pockets, and like finding a good spot is going to be hard. I do wonder how much of that was like, oh, we're not going to make a new high and counter flows, and like that move up in cumulative delta that I saw, that I was like, this is a large meta order. This is not really a large meta order, is just traders, because like we had that up and now we've had that down. Granted, we've had that down and we're not as low as we were, so that's a little supportive. Israeli negotiation team leaving to Cairo this evening for more Gaza ceasefire talks, Netanyahu's office says. Okay, but it does. So if you haven't been following that story, the Palestinians and Israelis have agreed in principle to an actual deal this time. Not like, oh, we put this thing out and now we're kind of strong-arming everybody into getting into it. Like Hamas has actually caved in on some of its key demands, like that Israel completely leave the strip and things like that. So they are actually now proposing a deal that Israel could actually support. We may actually see a deal over there. Which would probably be good for, would maybe take the risk price out of oil and then be good for the economy overall because of that. And in fact, just 5 minutes ago, so I'm just seeing that hit my newswire just now, but there was a move in oil there about 5 minutes ago, probably related to that headline. Okay, back to 17. So I'm not seeing too much on this one. It's just kind of standard 1,500 contracts or so each price. Sure is able to tick around pretty freely right now still. Probably need to keep an eye on the spreads here. I am noticing that the 30-year is right at its highs, whereas the 5 and the 10-year are not. Flows are very much more a sell in the 30-year though, so there's definitely some spreading going on. So I wonder, despite them selling the 30-year, the curve is flattening back out. Three scoops of chocolate chip if he gets through the press conference. You know, when they announced that, I was definitely like, what are they thinking? Like, I don't know. That brings me back to my theory that like they are pumping him full of drugs and they just didn't give him the drugs early enough when it was the debate. Maybe. But here's the thing. I don't think the press is going to play nice with him like they usually do. I think that the press could give him a hard time. Well, this seems like a very big risk that could really seal his presidency. Yeah, Biden. They're having a big boy press conference today where Biden will actually have a press conference and answer questions from the press. Is this his first actual press conference? I didn't think that it was his first, but it's definitely not very common. Yeah, per Axios. Maybe that's true. Because I have seen press conferences where, like, Biden answered questions, but it was only, like, 1 or 2 questions, and they were probably, like, pre-selected ones. And it was never, like, a whole, we're going to give you an hour and let everybody in the media ask a question until we're done sort of a thing, right? That's the way. When Trump did it, it was basically like everybody got their opportunity, and he'd even do 1 or 2 foreign news correspondents, right? And then, you know, when the media was finally bored with it, then they would end it. Oh, okay. So that 05 is not. Anyways, part of me also wonders if this is not like, you know, Joe Biden is still in denial, and so he's like, yeah, I can do a press conference, let's do a press conference, and all of his aides probably being like, this is a terrible idea, but that's what he really wants, and we're gonna do it. And you know, that's kind of what I think would be going on. I have no evidence to support that, but I guess what I should be saying here is that is a potentially market moving event. If Joe Biden's press conference goes poorly, that would really seal in that Joe Biden is not going to be president, and you might see some market rallying activity from that. Biden is always ushered away before the press gets to grill him. Yeah. And remember, there's this whole thing I've been kind of feeling through his whole presidency, that he wants to get involved, but that his handlers won't let him, right? It's always like he will kind of give a shot out there to them. He'll do something. he'll say something as he's leaving the room and everything. Like he wants to continue going, but they won't let him. Who'd have thunk that while the basement strategy got him elected, it'd work against him during his presidency? I do not know when the press con. Let's see if we can find out. Oh, Biden is... Oh, okay. I'm so dead wrong. Biden is scheduled to take questions from the White House press corps at 5:30 p.m. So it's not until the end of the day. Oh, well, that's interesting because they basically... Yeah, that's too late for him. Exactly. The whole thing that they've been saying is that, like, Biden works between 8 and 4 p.m., and then you get nothing from him out after that. And so that's why there's been all of this concern about, does he, like, what if there was the 3 a.m. call sort of a thing? And also some concern, like, or there was some joking, like, that he takes a nap during the day. They're like, why doesn't he come out and talk to us, if he's awake? Well, that was funny. But 5:30. Oh, that's interesting. And that will be after the markets are closed, too. I don't know. We've seen like 3 pops now up that didn't get too far, to be honest. We are open now. I didn't hear the ding. Oh, well, whatever. I guess there's that. Having him take questions during market hours threatens economic stability. Oh, you heard it? Okay. I'm just too ADHD to notice it half the time, probably. Sweating my position here, going like, am I really only going to take $5 from this? Man. Because... it is like, look at the cumulative delta now. Not what we want to see. That's not what we want to see right there. No. I've been kind of trying to play the bigger play, but that was maybe the wrong call in this case. But, I think we could still see some large meta orders. So, when do you... I don't think I ever have it reset, to be honest with you. Let's see here. Settings, indicators. Look, it's coming all the way back up to 07 again. So funny. 722. End of day reset, no. So it just never resets. So it would be anchored to like the first day in my chart. And I only have, how many days do I have? I have 5 days. So it's the number that you get is the net cumulative delta over the last 5 days. Basically, I don't pay attention to the absolute number in cumulative delta whatsoever. Only what trend we're seeing in it. Now, something I should note is on this market order imbalance indicator, we've still been right at 5, just a little bit below it now. Nothing too off kilter. Yeah, makes sense. Trend, swing highs, swing lows. Yeah, exactly. I want to know when I have a move, did we make a new high in cumulative delta or not? That's all. That's all I care about. What is qualified as imbalance? Well, so if we get to a situation where over the last 30 minutes, there's like a 60% of the orders are sell, which that would be a 0.4 on that reading. Then that's a significant imbalance. That's is significant enough of an imbalance that there's likely to be some reversion. But in this situation, we've been kind of like middle of the line. So, I think some of this has been the dollar, like the dollar has recovered a bit, right? So we lost like 5 to 10 ticks there when the dollar came off of its lows. Like, I think that's kind of generally what's happening is the correlation isn't working in my favor at the moment, and the long flows that I wanted to didn't really come through. Like we had that brief one, and I could have taken profits, and then that was all there was. Doesn't mean that, because we still got 90 minutes, so we could continue to see some flows long, but this kind of reminds me of these ones where like it pulls back, and so I go like, okay, fine, I'll just take the 10, and then by the end of the session, it just takes off. Or I hold it and it stays around here, and we end the session at 06, and then after I'm done trading, then it takes off. That's the other one that it will do. They're out to get me. They can't let this be too big of a winner. I understand. You guys do what you get to do. Oh, one thing I will say is that the treasuries have kind of like slowed down a bit. I'm still seeing a lot of level 2 activity, but these last 15 minutes or so has been a lot more sideways, right? Like, this is a lot more, especially when you get into this thing, right? Signs of a liquidity hole at 06, essentially. Which I guess you could say if it started at 7:20, we've got more time in here. Although, I don't know, maybe they only let those happen for 20-30 minutes. In which case we would be... Does it become harder to approach? No. So you get stuck in a liquidity hole. It's hard to get out of a liquidity hole. Once a liquidity hole has healed, it doesn't matter anymore as far as I can tell. I think you might be tempted to look at it and say, oh, there's a possibility for us to revisit it again and things like that. But I find that's not actually the case, especially not on a trend day. Today has the possibility of being a trend day. I don't know. So far, it's not doing that. So far, it's a double distribution. So, okay. What does the square root law refer to? The square root law refers to the impact of a large meta order. Okay. So if I trade 1,000 contracts and it moves the market up yay much, then if I trade twice as many contracts, will it move the market twice yay as much? No, it doesn't. It moves the market 1.141, or not 1.41. Oh my gosh, what is it? I thought I had it memorized. 1.41421 as much. So not even 1.5 times as much. That's the square root law. And what causes the square root law? The liquidity hole. Like you get into this hole, and it becomes harder and harder to continue pushing the instrument. Essentially, you have to wait, let the market heal, then you can make another push. Back to the low end of this 04 half. There's something about that last tick up that was kind of weird. Probably nothing, but I don't know how to put it, but there's just something when that ticked up that kind of caught my eye and kind of made me like hear like a little click in my head. Probably I'm just hallucinating things. That's hope. That's what that was. It was hope. Maybe just calling it the square root law and that explanation and everything that I have is just too complicated. The further it moves, the more volume it takes to continue moving it. I do think it is the dollar that's hurting me here. Which I hate. I hate when it's really just up to the dollar for my trade, because I'm not a currency trader, right? Makes sense now. It just takes me time to understand things. I don't recall how long you've been around, if we've had one of those more serious square root law discussions when you've been around or not. Like when you asked the question, I was kind of like, oh, I thought you knew all that, but don't worry about it. I think you got it. Not a huge deal at the moment, but you know, you can watch some of my videos like the proven market behaviors and inelastic market hypothesis videos, where I kind of go into it a little bit. Oh, you watched the videos 4 times? Oh, okay. There you go. Have you read the strategy PDF? So if you go to speculatorseth.com/strategy.html, put your email address in, and it will email you a PDF that really goes into detail on it. The thing that is cool about the PDF is that the PDF goes a little bit more into what are the practical implications for you of those behaviors. Love the PDF. That's good. I feel like in the PDF that kind of give me the opportunity to go into detail in ways that I can't in a video. So like if I turned the PDF into a video, it would be like a 10 video long thing. The PDF really is supposed to be like the beginning of a book. I'd like to spend more time on a book, but it's kind of like, I think that to do a book, I would really have to focus in on the book. And right now I'm focused in on indicators and stuff. The work that we've been doing on the indicators has been really good. It's been really good. And we did that thing yesterday with NinjaTrader and showing them the volatility projected range and stuff, which, you know, not everybody has the data for it, but people were really interested in it. So it's good. That's going well. That looks like that investment that we made 2 weeks ago is paying off. Your channel has fundamentally changed my trading path. Hard to believe I once used chart patterns at the start, right? Well, you know, the thing that is so crazy about it is like, once you understand things, you look at the charts and you start to think about how crazy it is to try and trade just off of the chart patterns. Like once you know, it just seems so dumb to do. And it's not like, oh, it's not like converting religions. It's like you've actually seen the data. So you know that on intraday trading that like looking for these patterns is just kind of a crapshoot. And what I've been trying to do more recently with my more recent videos is to try and help people understand how we fell into that fallacy. The way that we fell into that fallacy was that there were people that had success with mechanical, technical analysis strategies, but they were not day traders. And we all assumed that we could take that information and apply it to our day trading, and it doesn't work that way. When you're day trading, whatever the meta order is that's being executed at that moment is the only thing that matters. And if you don't know that meta order is coming, no point in taking a position. Well, I'm seeing the treasuries normalize a little bit. They come back to that 06, but it's still kind of showing me this thing where it's like, I don't really know if we have enough buy orders to really do a whole lot from here. But maybe the beginning of another meta order up. So I'm still positive. I think it's people don't know about the industry and how algo driven it is. Small time frames have so much advantage already taken off of them. Yes, I think that's, well, like more broadly, I blame the efficient market hypothesis, right? Like the average person's idea of the market is, it doesn't matter what I do, you cannot affect the market. You cannot move the market away from what fundamental value is. And the current price is fundamental value, and it's very accurate. That's the layperson's understanding of financial markets. And everybody that works in the industry knows that this is nonsense, because every institution has the problem of, we move it too far. We move it too far. Our impact is too much, and we're losing money on the impact of our trades. And so, because of that, traders don't realize how easily like this edge can be taken away, right? They think, well, if there's a pattern in something, all of us should be able to trade it, and it shouldn't matter because it shouldn't affect the fundamental price of the thing. They don't realize that actually it does affect the value of it very, very a lot, and it's very easy for a small group of retail traders to start trading a pattern and change the behavior of the market. And that's the thing that you have to fight against. Or another way to put it is that they do not understand impact nor the square root law. Let's see here. The changes in market flows and conditions in real time will always take precedence over magical levels and rectangles on a price chart, as those levels were never actually there. This is true. So that was kind of a key thing when I was talking on the Ninja Trader live stream yesterday, when we're talking about the implied volatility projected ranges. So there is a range that says this is how far we're likely to move based on implied volatility. And there is definitely a tendency for the market to come like right up to those levels and then stop. And that's as far as they can get for the day. But to think that it's some sort of hard line that the market can't cross or something is ridiculous. That's just like, you know, that's like where the market is naturally going to go. But then if somebody comes in with a meta order, it's going to push it through. Yeah. And you've got to another way of presenting this concept to people is that people's intuition of how to trade is there's a price that is correct. If we're above that price, I'm going to sell it until it comes back to that price. And if we're below that price, I'm going to buy it until it comes back to that price. But the reality is that there is no actual price like that. Nobody can calculate it. There is just the current price. And if somebody buys it, it's going to move us up. And if somebody sells it, it's going to move us down. And the bigger they are, the more it's going to move us. But there is kind of like a limit to how far they can move at any one time. And this is kind of why the market goes the way that it does. So the next move up or down depends entirely on what the next set of orders are going to be. That's that. It's that simple. It's a bunch of people just moving a little stone back and forth, right? Where is it going to go? What is the guy going to do? Is he going to push it or not? Like, that's it. They keep coming back to that 06, but then they fall back to 05. Kind of interesting. So there's been a lot more trade at 06, but they keep hugging that 05. And VWAP is now at 05, by the way, too. I think I would need to see, like, if we're going to get this other move, we would need to see a bit more from the 5-year. But for the last 30 minutes or so, it's basically gone nowhere. Actually, I'd say even more than that, like since 7:20. So 40 minutes almost. Well, I guess 32 minutes exactly. I'm rounding too much. At the very least, what I'm seeing is that we did have a sell flow in the treasury. Perhaps that was a second round of profit taking, but they handled it pretty well, and that flow has subsided. So we could maybe say that much. Well, you know what? We never checked Zero Hedge again to see if they've got a story on CPI, which they do. So let's read that. Who could have seen this coming? From 3 months ago, we are now headed for an epic perfect storm of Fed cuts just as rents start rising again. Yes. Expectation for evidence of a return to disinflationary trends were high heading into today's CPI, and they were more than satisfied by a 0.1% month-over-month decline in headline consumer prices in June, the biggest month-over-month drop since May of 2020. That pulled the headline year-over-year CPI down to 3%. This is the third consecutive miss for CPI, prompting calls for July rate cuts, with 3-month and 6-month annualized inflation declining. You didn't receive the PDF after filing the form? What? You can check your spam folder, I guess. I don't know. I can send it to you on Discord too. In fact, I think it's there on Discord. You just go in Discord and send a message and I'll post it. Actually, I'll just come in here on main chat. A bloody file. Let's see here. Where is it? I have to remember where I put it first. Work. Oh, here it is. Put it in the main channel in Discord. If you sign up for the mailing list, I'll also send you messages when we update the indicator suite. Things like that. Oh. Oh, you got off Discord? Okay, cool. So I'm just hearing a headline that reporting that Japan did intervene in the Forex market. I kind of wonder when that was, because there's not like a clear spot in the chart of the yen lately where that would have happened. But there was some spots where we did kind of think that, oh, maybe they are getting involved in here. Where was it? The Japanese yen. Oh my. By the way, look at this. Was it that they intervened today? Because look at how much the Japanese yen moved today. Wowzer. That is so interesting to me. Okay, anyways. Got back up to 07 too, by the way, so that's looking good. Anyways, back to our story. This is the third consecutive miss for CPI, prompting calls for July rate cuts, with 3-month and 6-month annualized inflation declining, but July odds remain low still for now. Headline CPI breakdown. The all items rose 3% for the 12 months ending June, a smaller increase than the 3.3% increase for the 12 months ending May. Energy index increased 1% for the 12 months ending June. Food index increased 2.2% over the last year. The index for gasoline fell 3.8% in June after declining 3.6% in May, more than offsetting the increase in shelter. The energy index fell 2% over the month as it did the preceding month. The index for food increased 0.2% in June. Food away from home rose 0.4% over the month, while food at home index increased 0.1%. A deflation in energy costs and core goods dominated the data in June. Both goods and services inflation fell on a year-over-year basis. Core CPI also missed, dragging the year-over-year core CPI down. Consumer prices have still not seen a single monthly decline since Bidenomics began. Sure. Core consumer prices have never been higher. Removing auto insurance would cut Supercore CPI in half. Really? Okay. So car insurance is like the biggest contributor to when you take out energy, food and energy, which are really volatile, and you take out housing, which is lagged. Of those things that are left, auto insurance is half of the rise. That's interesting. Because how long does that last for? Because one side of looking at it is, how long would that last for? The other side of looking at it would be, if you take that out, then inflation is really, really low. That means that we really are like close to doing a cut, you know? Well, anyways. That is like, if you take all of the things that matter out, though. That's the problem with the Supercore. But there's a reason why we have it. It does matter. We can't help but get a sense of deja vu all over again here. What if the Fed cuts because bad recession data, Biden loses because of his dementia, and then inflation reaccelerates like it did in the 80s? Who do you think gets the blame for the reinflation? Well, economists have already begun claiming Trump's tariff plan will prompt spiraling higher prices. So we have our answer. There are no coincidences in Washington or Washington-based data. You know, I'm sure that that does play in here a little bit. Oh wow, that really moves. So now we finally got 25. Okay. Oh, because the 30-year pushed higher there. I see. I see. The 10-year still hasn't made a new high though. That's kind of what I've been eyeing. Is I want to see the 10-year make a new high and maybe some stops. What? No, I'm just saying it's hard to tell if intervention happened or not. Okay, I don't understand that one, but whatever. Hey, let's see here. We've been seeing a rise in cumulative delta through this move, but it's a much more gentle rise in cumulative delta than the other ones. So I guess that's a good thing, though. That's a good thing. Now, what about the S&P 500? Well, it's higher than when we were talking about can the S&P 500 recover and move back towards the highs of the day? But not too much higher, only about 10 points. So, oh, okay. So there was Japan's Vice Minister Kanda says, I am not in a position to say if there was intervention or not. While others saying that there was intervention. So I'm wondering, Uzi, are you using the latest version of NinjaTrader now? You're still there? Because I've been having some people have a problem. You say yes. Okay. I've had some guys with a problem importing the version that is on the website right now. And so I'm wondering if it's because they're on newer version of NinjaTrader or something. But you're on the newest version. Maybe it's just that when we release the new version that it will fix that problem. Now he's getting errors. Like newest version of when we make a new version of the indicator. Oh, SPS time frame. Oh, that's weird. Oh. I'm not even sure where that there we go. There's the high. Okay, so focus. I can do that later. SPS time frame could not be found. I don't know where that comes from. Trader's profit sold at 56.95. Okay. I don't think it's gonna go back up to those highs, like 57.10 or something. I have no clue. I haven't, like I'm not in equities. It's so hard to predict equities, right? So now I'm thinking back to Octavius saying put a target limit order in. ZB is going after the evens again. Why were you saying to put a target limit order in? Do you think that would have changed something? I am kind of looking at it now like, okay, so I'm a lot happier with what I got. I am getting a little bit of like, okay, but I also have some signs that there's still a little bit to go. So I don't know. Oh, well, it's already a little bit too late to get the 30 even at least. It seems like the book is thickened up a little bit though. PLT is pulling back. Okay, well. So I think one of the big things that we need to be careful about is the dollar, right? That's kind of been the thing that's been screwing us up so far. There was a little bit of pushback there. Cumulative delta came back a little bit. Okay. No, I don't like that. So I tried putting out a limit order to see how, and it immediately filled me. So that kind of makes me think that I got out too early. This time, if it pushes through and it goes further and I could have made like 20 more bucks or something like that, let's not stress too much about it. Shall we? 30 bucks on a trade is really good. Forex moves not in line with fundamentals are concerning. Well, the move that we saw in the Japanese yen was in line with fundamentals, but it sure went a lot farther than like anything else we've seen recently. So I do kind of wonder if there was some Japanese intervention in that. Okay, well now I guess I can go and do what I wanted to do, which is find this bug. What's with this? Oh, actually, let's not do it that way. Let's do it like this way. Okay, grab RN. SPS time frame. Ah. Okay, there's a down ticket. Oh, wait. Can you believe, though, like, how much it fought me on that? It's so weird the way that, like, this is one thing that I'm not entirely sure that the empirical properties of markets explains for me. Why is it that when I get into a position, it fights me forever and ever and ever, and then when it finally gives up and gives you the win, it does it so quickly? You know? Because it's very rare that I get in, it does that quick move, and then I'm out and don't have to worry about it, right? Like, I usually have to sit through it. And okay, there is, well, the chart pattern is really kind of, I don't think that this matters at all, but it came back there for sure, right? Oh, you did it from 56.95, dude. That was a legit good one. Sometimes when you guys come in and start putting trades, and I'm like, because I've had some guys that they'll come in and they say that they took a trade at a certain spot, and I'm like, there's no way that you got filled there. And it's always in a spot where they wouldn't have gotten filled. And so I'm like, you're lying to me. But that one was totally legit. It was at 56.95 when you said that. There was plenty of time for you to have taken that spot. It came down. Absolutely. That was a good trade. There's only 5 points in the S&P 500. But hey, who am I to? That's a pretty good win in the S&P 500. It's like within the range, but it's still a lot of money, right? You caught a real sell. I kind of wonder what. I mean, that was some like real flows. Were you taking that off of some sort of? I mean, did you have an informational inefficiency that told you that sell was coming? Because that's pretty. That's pretty good. Man, that was kind of a weird sell. Is this, now that this is dropping? Ah, yes, it is. Oh, that's so interesting. So when the S&P 500 started turning down, that is also when the treasuries started turning down. And I also, okay, during this time frame, gold continued to move up. But we did see, if we come back over to here now, we did see a pivot in the dollar. So that shift may have been a reaction from the dollar. That change in the dollar isn't coming from the Japanese yen. It is coming from other places. A little bit in the 60, maybe from the British pound. I don't know. Oh, so interesting. So interesting. And there's back to 07 almost. I think I did. I think I played it right, guys. I think that there was probably more luck in that trade than I wanted, because I don't think that I ever really got the kind of flow that I was looking for. Like, if we had gotten the flow that I was looking for, we would have really have busted through that 111.10, and there would have been a stop run and so forth. I don't think we really quite got that. We got a stop run on the 30-year breaching that high. And the flows during the time that I was in the trade were still very much mixed. So I wouldn't say that, like, I was dead wrong and that, like, the whole premise of the trade was bad and that I got lucky. I think that the premise of the trade and everything was still pretty good. It's just that there was a lot more iffiness in it than I would have liked. So I guess that's kind of good and bad. It's good because those are the sorts of trades that screw me up and I mess up on. And I played that one pretty good, so that's really great. But it's bad from the perspective of, you know, we still want to predict orders, right? So I guess that goes back to when we were saying that the reaction function to this is a little hard for us to figure out. So, NQ absolutely melting. Is there like some headline I missed? Japan's top currency diplomat Canada, if we did intervene today, will disclose it at the month end. Oh, they're playing coy. I think that they did intervene today then. I think that kind of seals it for me that they did. SEC drops key stablecoin investigation. Magnificent 7 bearish since the open, excluding Tesla. Yeah, I can't say what's going on. The treasuries have recovered a little bit. So, you know, that is a pullback that I did not want to sit through. So I'm okay with that. I think that I should still be a little bit like, you know, it could go further. I got out at 16.5, so not 16.5, 165. Let's see here. To take this sell at 56.95, I saw high volume news from the news. This is the same level, so maybe those sellers came in again to take the market down. So I predicted those sells. Yeah. The issue is that orders can predict future orders, but like in very limited forms, right? Like, if I'm seeing a persistent imbalance in the market orders, those imbalances tend to persist, for instance. That's the strongest one that we know of, right? So, like, the setup that you described, there was a high volume node at 56.95 that we got to. Okay. Well, maybe there's something to it, but I don't have any evidence to support that kind of a setup. But it is curious to me because the way that it's dropping really suggests that like there was some sort of a headline or like something's happening, but it doesn't actually look like there is. So it could be endogenous. It's a little wild to me to see us now below the price from before CPI. It's not like yields backed up or anything. Well, yields are almost exactly where I took profits. So I don't know, man. This is weird. U.S. West Bank related sanctions target 3 individuals, says the U.S. Treasury Department website. Okay, I don't think that that's it either. Jim Iorio, the Project 2025 controversy is a total hoax. You fall for it. Fall for it if you want to, I guess. It's actually mostly logical and centrist policies, but it's still a hoax that it's Trump's agenda. You know what, Jim? You're right. He is, I'm often like, I'm way too political. Jim is way political. The Project 2025 thing is a Democrat firm of some sort. I forget what you would kind of call these, but somebody specifically pushing a narrative. They tell all of these influencers you need to talk about this, and then you have all of these people search for it, and then you try and make it a viral thing, and then it takes off. Because there's no reason normally that anybody would care about that. Like the Heritage Foundation puts out a policy platform agenda sort of a thing like every election. Nobody's ever cared before now. So that one is interesting, I guess. I tell you what, I'm a little bit bewildered by how the micros are moving in relationship to the 10-year. I think that part of it is because, this is actually a 10-year and this is more of like a 7-year. And so in some cases, the micro moves more like the 30-year or ZB, which isn't a 30-year, it's like a 20-year. But I digress. I'm making it too complicated. You'll see ZN maybe come back like 2 ticks and it's like 10 ticks over here. But then you'll see this move and it's only barely moves over here. It's a little frustrating, but I those are the sorts of things where depending on what the yield curve is doing and all of that, you'll see that. So it's just like, okay, I got out at 16.5. Right? It's already, they were touching 17.5 there just a moment ago. You lose 10 ticks just like that. What's Nate Silver talking about here? Asked about Senator Mark Warner wanting him to step aside, President Biden responded, "He is the only one." Now, Sahil Kapoor says, first Democratic senator officially calls on Biden to drop out. Senator Peter Welch of Biden should withdraw from the 2024 race. And then Rob Pyre says this didn't age particularly well. Then Nate says it's a terminally online campaign that all along has been trying to win the narrative instead of win the election. It can't think more than 24 hours ahead. It can't take an L, and now it's lost the confidence of the party. Talking about Biden, I assume. Is the Biden campaign a terminally online campaign? Maybe. That's kind of a curious thing for him to say. There has to be some headline the DOM thinned out and the price melted for ES. Maybe. So there's a few curiously large order. I guess the 5667, that's just the 3 ticks away, and then there's the low at 5665. But you're right, it does still kind of seem a little bit suspiciously like there was a headline. And I'm just not seeing it. President Biden's campaign unveils ad calling Trump a, quote, lapdog for Vladimir Putin. Okay. Japanese officials after seeing the US CPI. This is a little curious to me. So basically, this time around, they waited for a piece of news that was going to go their way to do their intervention, so that their intervention was in line with the fundamentals. Okay. Well, if they actually make money after their intervention this time around, that would be a good change for them, wouldn't it? Okay, so here you can see, when I got out, we were around the 09 to 010 area, but we're still down, or we would still be down about 6 or 7 ticks, because the 30-year is 2 ticks lower. So because the spread has steepened by about 2 ticks, the yields are off a little bit by almost 10. Well, let's say 5 ticks. So that's kind of like where I'm like, it's weirding me out, because I'm more used to, well, I shouldn't say I'm more used to, but the moves in ZN are pretty consistent with the moves in the 10-year. So I guess it's been a long time since we've seen the yield curve move this much, huh? So I guess what that really means. Let's see here. Oh, somebody said my name. What's this? Uh-oh. Oh, yeah, somebody spamming us.
Block by.
Okay, so we're gonna get the natural gas report, right? I should come over into here. Dun, 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 dun. So this markdown file is for the changes that we're making. So with version 3.2 of the indicators, we'll add the news event, moved out some behavior into cached indicator base, Updated defaults of volatility range, added scatter plot. Let's say adding in here, updated, on each tick. Let's say updated market order imbalance logic to work better when indicator is set to update on each tick. Updated defaults of the volatility range and added the scatter plot. That's what's going to be in the new version. And I will probably try packaging that up together and running through my tests and everything this weekend so that you guys can have the new full version on Monday. So then, oh, is this not the... Let's see here. So I think that we want speculator Seth to do... Oh, actually, it's... Yeah, this one right here. Okay, so we did that one. Do we have a done? No, we don't. Let's add a done. Yeah, we got a lot of work done. We got a lot of good work done. Candlestick plus is another thing that's on there. Oh, do we call them? I do have that on there, right? Oh, no, I don't have it in here. Oh, it was. I think that was because I was gonna try it on my own. This one, is this one running on it? No, it's not. Do I even have a chart running on it? Well, that's weird. Let's use optimize candlestick over here. Down bar, up bar, down bar. Oops. Up bar. Bar width 1. Okay. Oh, maybe I should have the bar width to be a little bit larger. Maybe bar width of 3 is fine. Yeah, okay. Yeah, let's run with that for a little while. I don't have that one up, so on here, website. Add optimized candlestick. Add news XML or news CSV. Okay. Man, we've come back. Now we've really come back. We're back all the way back to 06 now. Okay, so backtesting cache data is the top of my list. How did you change your career from manual trader to programmer? That's not how it happened. I was always a programmer. I was always a programmer first. That's why it's like on some of this side, like I have the indicators and I sell the indicators. I would like the indicators to become more and more a part of my business. And that isn't to say that like I'm giving up on trading or anything like that. Hey, last couple of trades that we've taken has been really good. So I feel like I'm getting back into the groove a little bit, you know, and these are trades during the summer, so that's really good too. Hey, but it's just an acknowledgement that I'm really good at programming, and like my strongest edge, it comes from the programming side. So anything that I can make that takes advantage of both of those things together to help you guys, that's going to be the thing that the most value that I can give, right? I'm a very experienced programmer. It's so weird to say that, like, to say how experienced and good am I at this compared to other people, sort of a thing, because when you say you're really good at something, that's kind of like egotistical. I'd never considered myself to be super good at those things. It's just that I can now see the reality in the industry, like the amount of time that I've been around and the level at which I've been doing things is you know, unusually high. And so having a programmer that is as experienced as I am and has this much understanding about the markets as well is unusual. It's not like I'm the only one, but it's unusual. And it's unusual enough that, you know, I think that I think that with the indicators that I'm giving you right now, that's an advantage. Nowhere else has this collection of stuff. These are all things that I think are like essential to trade, and nowhere else has it. That's wild to me. But nobody else had this kind of combination of things going for them, right? If I were to make my own platform, I think that I could do really well with it. And that's kind of just been the thing that's been on my mind this past week for some reason. That, like, man, if we can, you know, really get this going more, enough that we would be able to have funds to kickstart developing a platform, that would be amazing. And I could do that full time. Like, trading full time sounds like a nightmare, but doing like this business full time, we could do it. Spend a lot of our time managing a company, doing the programming side. Yeah, we could totally do that. And I think that we'd have some advantages. Now, to get there, I think it's a long road, because, like, if you think about, I need, like, to make more than 10K a month to make more than what I make at my day job. You know, so that's like 100 people a month would have to buy the indicators. I don't know how realistic that is. That's probably why a lot of these other indicator suites and stuff out there are worth a lot more. I think that over time, probably I will increase the price on my indicator suite in line with, you know, the features and value that you're getting out of it. And the market demand, of course. Do you think a strategy that scans for abnormal crypto moves up and takes a short on those abnormal moves could work? So I mean, I think it could work. It doesn't sound like a strategy that I would be particularly interested in pursuing, because it's going to have a fat tail to it, right? Like right now, that probably works. But then you go back into a market where, like, every crypto is pumping and just continues to trend up, you're going to get slaughtered by a strategy like that. So you might be able to get something to work in the current market, but I don't think that it would really be worth your time. I think that there's probably better strategies you could come up with in crypto. Frankly, in crypto, I think the way to play crypto is buy and hold, man. Like, wait for whatever altcoin you're interested in to be dead, and then buy into it in the hopes that in the next crypto run that it rises along with the rest of the market. And of course, have something in the big ones like Ethereum right now, especially. I think that that'd be a more sound strategy to trade crypto, because, like, trying to do the... I think that over the last 5 years that most of the high frequency trading opportunities in crypto have disappeared. And you know, the risks on the day trading side of it are so high, it's not worth it. I wrote an HFT on crypto, but commissions don't let me trade it, and MaxC blocked me. That's interesting, Stefan. Well, one of the things that kind of keyed me into that the arbitrage opportunities are maybe gone was that part of the reason why the whole Alameda FTX fiasco happened was because they were doing high frequency trading and their strategies weren't working anymore. Somebody else had come along and were faster than them. And so they started taking on more and more risk to compensate, and that's how they blew up. So that's the thing that made me say, okay, like there probably was more opportunity in high frequency trading than I thought. Maybe it was still the case that to really do it, you have to be an institution. But whatever opportunity there was there in the crypto space is probably not there anymore, unless you're trading like really unknown altcoins. Can using Jigsaw's pace of tape help determine if meta orders are coming through? You know, I don't use that one very often. So for those of you that don't know what he's talking about, there's let's see here. There's these things right here. You're talking about the gauges, right? You're talking about the gauges that kind of tell you how active the tape is. I think that what they're trying to do is get a reading of what intraday momentum is. And that's an important thing for watching the DOM and understanding what's going on in the DOM. But I don't think that it will really tell you about the meta orders. Because, like, one of the things is that the best kind of meta order is really slow. The best kind of meta order is the market is not really doing a whole lot. Everything's kind of sleepy, but there's just this really persistent market buying over time. Those are the, especially in ZN, those are the freight trains that just like never stop, right? You want something that they're executing over a super long period. And so it's not going to be fast necessarily. You know, like when it gets too fast is when I tend to look for profits. Like that is kind of how I ended up being able to take my take profit at almost the high of the day here. Not that it couldn't potentially go higher after our stream, but if I'm going to limit my trade to this stream, I got the best exit I possibly could have. In fact, I think I almost got the best entry that I possibly could have as well. Wait, what time did I get in? I got in at 6:55. Oh, heck yeah. Dude. So it won't show you on the Ninja Trader charts because, you know, I execute on Jigsaw. But basically, I got in right here. That's not working. I got in right here, and I got out right here. So that was about as good of a trade as I possibly could have gotten today. Wow. I should be more proud of myself than I have been. that was pretty well played. That's the kind of a trade that'll make me egotistical and turn things into you lose every time. Anyways, started getting too fast, so I got out. Because that's like what creates the liquidity holes and causes it to go sideways forever, and you know, we hate that sort of thing. So I'm really happy about that trade because that will also pay for our data this month. It's all profit from here. Pure profit from here, guys. It's only the 11th, right? Nah, although I kind of suspect that the opportunity for this month after tomorrow might be a little bit more limited. Actually, talking about large meta orders, I think that you could see the treasuries, or the yields on the treasuries continue to fall down towards 4%, but I'm thinking that it might be a really slow creep. Your stance on crypto. So, this is, I hate talking about this, but so let me level with you. A large part of the initial success of this channel was because of cryptocurrency stuff. Like the first time we ever went live, like I was just posting a recording of my trading every day, and then YouTube had just made it so that you can like live stream and stuff. And so the first time that I live streamed, it was the day that the cryptocurrency futures went live. And I live streamed that, and we had like 5,000 viewers on it. And we also, at the time, started publishing my valuation model that basically kind of says whether cryptocurrency is overvalued or undervalued based on transactions on the blockchain and how much value is actually being transacted on the blockchain. And so that was like how the channel got its start. Now that valuation model has still been very, very useful, but cryptocurrency never really came back down to a level where it was like, based on the way that I wanted to trade it, at least, that it was a good buy. It might, if they take another drop, then it might get there. But by that time, I was just so sick of the market, the cryptocurrency market, all of the fraud and everything else. And this was kind of like, especially around the FTX time, right? Where it was just like really bonkers crazy and everything. I was just so sick of it. And so I made the conscious choice to just stop talking about crypto. Like I stopped promoting the Patreon. The Patreon went really, really well for a long, long time, really dedicated fan base. And then when the pandemic happened, like everybody canceled their Patreon subscriptions because, like the economy died, right? And I'm sure I probably could have built it back up, but I didn't care anymore. There's still a few guys that do it, and so I post an update once a month, maybe. Not every day like I used to. I could start it up again. I still think it's a valuable thing, but I just don't want, because if this is like we're building a business, we want income coming in so that we can like hire more programmers and build a platform or something like that. Like that would be a good way to get income coming in, but I just don't care. I don't want it to be held hostage by the stupid stuff that happens in cryptocurrency, I don't want the YouTube channel to be held hostage to the stupid things that are going on in cryptocurrency, whether the cryptocurrency world is hot or not, whether YouTube is okay with people sharing cryptocurrency content or not, right? So I really just completely stopped talking about it. So any coins you're particularly fond of? So I was always into, I can't even remember the name of things anymore. There was one that was actually used to store files. It had some problems, but I did really, really well with it. I think I made like 2,000 bucks on that one coin just from mining it and it taking off, which was really crazy. I still own a lot of garlic coin. I haven't looked at garlic coin in a while. Let's go to coin markets. I never sold my garlic coin. It's in a cold wallet, so oh, it's not doing too bad. It's over a cent, so there's that. Okay. If I can go to like the past year. Yeah. So this is a lower end of its range, but it's still doing okay. What are you working on indicator related? Well, so as I showed you here, The most recent stuff that we did, we added an indicator that warns you of news events and allows you to program strategies that will not be in trades during the news. Exit 1 minute before the news and won't trade until however many minutes you decide after the news. So it's really good for backtesting, especially optimizing backtests. We updated this market order imbalance indicator. That's the one that I really want to do like backtesting on. So on our to-do list, the next thing is backtesting the cached data is we need to get back into that. I also did just some back-end work, so that probably won't affect anything, but spruced up volatility range a little bit. And we added a scatter plot. So if you're interested in that, I was on NinjaTrader live stream yesterday. You can go and watch that and see the scatter plot and everything. I took a picture. Where did I put the picture? Because I don't have the data to do that one, but I had it that day, and if you have the data, you can make the scatter plot. Ta-da! It looks so cool, actually. It looks so cool. All right, so that's. But then I think the next big thing that I got to do is try and make a backtest that works on the cached data for the market order imbalance. Yeah, when I changed it from just a point to like an actual circle, I was like, oh yeah, that's cool. I really like that. Anyways, so and release a new version. Is backtesting cached data. And that's the most important. Now, if you have the indicator suite, and remember, you can download it for free at speculatorseth.com. It has a 2-week trial. And then after that, to continue using it, you need a lifetime license, which is $100. So super cheap. And if you have it, and there's something that you would like, some especially, features that you think would help the existing indicators be more clear and so forth, then please let me know and we'll add them. This ICT guy, you found ICT through Discord? Wait, so first of all, Forrest, I didn't acknowledge that you come back and been chatting with us unless you're a different Forrest. I mean, that's a common name. If you're a different Forrest, let me know. But I'd be surprised that you're only finding about ICT now and that you would find him through Discord. But basically, he's a fraud. He's a fraud. There's actually so I made a YouTube video about this. He has one strategy in particular that he calls the silver bullet that like really took off and everybody was like loving it and everything. And so I did a backtest on it, and the backtest basically suggested that the strategy was profitable for a short period of time, primarily or at least I have some evidence that suggests that the reason it was working was because it was so popular amongst the retail traders. But once it really, really broke out and started to become almost like a mainstream, like ICT it became so popular that there was like other channels making content about his channel on YouTube. Like it was a searchable term on YouTube. You search for Speculator Seth on YouTube, there's not a whole lot of a trend for that, right? Once he reached that mega popularity stage, the strategy became a complete loser. So, and then on top of that, so I made that video, and then on top of that, there's another video, Imam Trading, or Iman Trading. I don't know how you're supposed to say his name. He made a video basically going into this guy's history. I don't think that he even had the best part. ICT was convicted for fraud. Yes. He was telling kids to take out student loans and then trade the student loan. And so, you know, he was like assisting and encouraging people to do that. And so they convicted him for fraud. And that was like long before he became famous. Everybody forgets about that, but you can look, you find his real name and you look him up, that you find that. And, but basically there's two things to this. Like, how does he do it? One is that if you take a lot of risk, so like you're one a teeny tiny little winner, and you know, you'll let it go way far against you before you give up on the trade, you can have a high win rate, right? Like if you have a 2-to-1, your risk is twice as much as your reward. You should get like a 60% to 80% win rate from that alone, right? The other side of it is you just lie. Like you change pictures and fake things, and there's been many times where people have called him out for faking results as well. So, and I think iMan Trading shows you some of that. So, but yeah, this one, I like, you gotta be careful when you're talking about people, because like you're making statements and like they come out after you. And even if I'm just, you know, making an opinion or things like that, you know, they might try and sue you and everything. But I feel very comfortable in saying that ICT is a complete fraud, and that I would not recommend anybody following it. So that one's kind of like done it. There was a time where like you push back against it, all these people would jump on you and everything, but now you go on Reddit and everything, everybody will pretty much tell you he's a fraud. So that's my opinion. So it is time for me to get going, actually, with that. Man, CPI, so let's say Blockbuster CPI. Blockbuster CPI crushes yields. The S&P 500 is actually lower, but yields got crushed. More like a 10 or 12 basis point move today. So, guys, I gotta get going. I will see you tomorrow. We have PPI. And it's Friday. Can't believe it's Friday already. Yeah, great day today. I think we had both a good trade and had good discussion on the stream and everything. So that's good. See you tomorrow. Stay excellent, team.